Okay, folks, so we need to give a violent update on the market and plays. Then I would like to present one of our lovely $5 stocks that just had a huge win today and a nice little breakout. Analysts that were surveyed have set a price target as high as $12 on the stock, which is about 141% of upside from the current trading price. Will it surge that amount? So far, it has more than doubled from our call-out price last Monday at about $250-ish a share. Obviously, hype trade, and not all hype trades work well because trading is a probability game. And eventually, what goes up must go down. But you got to admit, the setup is very, very interessante still. 40% of free float is short, and with utilization at 100%, short sellers are paying cost to borrow fees as high as 328%, which means they're basically trying to throw the book at this stock, yet it just doesn't want to budge. For some reason, it keeps going spiky. Very bad, very sad. I feel so terrible for these short sellers and their families. A lot of people don't realize that I have a hard time sleeping at night when I know that these short sellers are losing tons of money. It's just like, wow, how are they going to make their 15 different mortgages? We'll talk about what you need to know on this stock and some potential catalysts to keep an eye out for. Okay, Marketo was a bit scared today before the inflation report came out. Then it came out and it bounced, and then all of a sudden it decided it was scared again. Welcome to 2022. I'm pretty sure the same thing happened the last two times that we got a CPI report. Inflation was hot, but not that much higher than expectations, only like a 0.1% higher than expectations. Cars and trucks cooled down, energy is through the roof, food prices have accelerated, pretty much everything that you could have thought would happen, happened. On the bright side though, if you get rid of food and energy prices, well, inflation did decelerate a bit month over month. Unfortunately though, that's not exactly bullish because you have to come up with a reason that food and energy prices are going to be substantially lower in the next 6 months in order to make a projection as to when this inflationary trend is going to start getting under control. But I want to start with a major catalyst play from this morning, LIXT. This morning we briefed on LIXT because it had seen a momentum rally after reporting positive results with their anti-cancer drug combinations. I reflected on the fact that cancer-killing winners have seen some of the biggest hype rallies over the last few weeks. Remember SBRFM that had that other mRNA cancer trial success, and then it ran up huge? Well, this was another one that had that same setup. And of course, shout out to researchers that are doing their best to kick cancer in the rear end. But in terms of practicality as traders, I said importantly, LIXT is already up a lot. Ideally, we see a cool off and a new breakout attempt. In the morning when I briefed on it, it had already showed that proof of concept. Unfortunately, it was already up a lot. So I was like, okay, well, we need to see, guess what, some cooling off before we get another breakout attempt. We did get that cool off into the last period of pre-market and then later a bounce right after market open. It bounced from 238-ish after open to 495 at highs, which is a 107.98% run dip to high. But let me blow this up for a second. For controlling risk on hype trades, what do we preach? Bare minimum, Charlie preaches, have a clear plan. That means entry and exit plan. There's a lot of different ways to skin a cat, but the ZIP approach is a confirmation of strength over our blue price strength SMA for entry and a validation of price weakness back below our blue price strength SMA for exit. The goal of this isn't to capture the full run because you can't capture the full run unless you have a magical garden gnome that spits out prices. The goal is to look at statistically significant areas where you have a breakout in price strength or direction and try to capture as much momentum as possible, driven by a catalyst that you've already identified. That's the minimum, and we have a complete detailed walkthrough of our trading style in ZipTrader U, which has a coupon code that expires at the end of the month, by the way, and the prices will go up afterwards. But I really invite you to first go through some of our basic and free trading tutorials like when to buy stocks, when to sell stocks, and even our Trading for Beginners video where we have our fireside chat and I look like a vampire. I don't tan well. I'll link to all of those below. You have no excuse not to familiarize yourself with different concepts that could help you quite a bit in the market. As fun as it is to YOLO into random trades when they're moving, that's not really a sustainable strategy. And remember, no matter what it is that you were trading, the biggest runners, the biggest winners are always going to end up eventually being the biggest losers. And I don't mean the TV show. For example, a big winner of ours from yesterday was Veru, and the Veruvians were very, very happy. But what happens if you don't have clear entry and exit plans? Well, today you got another attempt at a breakout in the pre-market, and I was even scouting out to see if you'd get some room for other residual smaller runs. But guess what? It breaks below our red directional SMA line, signaling a change of direction, and at that point it sells off dramatically. The point is, clear entry and exit plan, no matter how good you think the stock is. I do want to post the morning catalyst section from ZipTrader U today. We post a new one every pre-market, 30 minutes prior to market open, with a breakdown of usually 5 or 6 different tickers. Obviously, there are thousands and thousands of tickers out there in the market each and every day, so our goal is to narrow down which catalysts we think are going to be the most actionable, and then set some bear and bull criteria for them. I strongly recommend doing this every single day in the pre-market as well, whether or not you are a member with us. You need to have a game plan or you're just going to be looking all over the place and saying, ooh, that's running. What do I do? Ooh, that's dropping. Ooh. Okay, main entree. I hope you're hungry. We got to talk about ATER. So obviously we have been covering ATER quite a lot over the last week and a half. And we've set high standards for it pretty much every step of the journey, and it has kept upholding our standards. And with ATER, it's now managed another bounce from a post-rally uptrend. On Sunday's Top Stocks video, I talked about how I'd expect a sell-off early on in the week, but what you wanted to pay attention to was where it retained value and bounced from. That evil R word that no one wants to talk about. Retention, retention, retention. So important. Doesn't matter if something sells off. Needs to retain value. That's what's important. We did get that sell-off yesterday, and in last night's video, I said the same thing. We wanted to bounce off that retaining value, and today it did exactly that. And even bounced more as I was filming this video into close. This is exactly what we wanted to happen in the best case scenario. And it happened despite the fact that the market went and vomited up a lot of value today. The NASDAQ was up like 2% at one point, and then it was down 0.5% or more. Yet you have an obviously more risk on play like ATER, trying out for a new breakout and then actually achieving one. Now that we've hit another breakout rally, the question shouldn't be how far this is going to run in the current cycle, because that's really a guessing game. But the real question is rather, will it once again retain value at a higher price once it inevitably has another breather? And in order to judge the probability of that happening and why it's so important, you have to know two big things right now. Number one is gamma squeeze potential. What is a gamma squeeze, Charlie? Well, it's simply when you have such a large amount of trading volume flow in one direction in a short period of time that it triggers a reaction in those market makers. The market maker who provides options liquidity will often have to buy shares in order to create neutrality in the position and hedge against the options that they're fulfilling getting redeemed. This is the process called delta hedging. A market maker in the derivatives market has the goal of offering options to people and making money that way, not necessarily taking a biased position one way or the other. So the way that they get rid of the bias while still being able to offer options is oftentimes by buying shares. It's not always, by the way, and you've seen that happen in AMC and GME and a lot of other stocks that don't really trade as much on the fundamentals but more on short squeeze potential. But oftentimes the standard for delta hedging is with buying of shares. And basically when a change upward in share price happens, market makers can be forced to buy more shares rapidly to keep hedging consistent. And that causes, guess what, an even more rapid acceleration of share price, which means that the market maker has to go and buy even more shares to hedge against the change. So the question then becomes, what are the telltale signs that a gamma squeeze could potentially be coming to a stock near you? Well, the highest chance of a gamma squeeze comes when your stock has unusually high at the money and near the money call open interest and is making a move upward. That means the market makers are at a strong risk of having to hedge in order to keep their neutral position. So when it comes to ATER, what really is a price point and time where that could be most likely to happen? Well, it could really happen at any point, and it has happened to smaller extents over the last couple of weeks. But where this may become very relevant again is on Thursday, or at least in the lead up to Thursday. You see, this week again, we have a shortened trading week. There's no trading on Friday. And as of right now, because of how much the stock price has gone up, a lot of options are set to expire on April 14th, which is Thursday, in the money. And I would speculate if this manages to simply hold into the 5 or even the 6s the rest of this week, an interesting dynamic is going to emerge. The more call options that expire in the money, the more hedging that is going to need to take place from market makers. The problem is there's not a lot of liquidity in this market. You have to really bid up prices in order to get shares in any substantial volume. And if ATER ends up holding above $5 at this strike price hither, that's where you have the most open interest, 20,196 contracts. In comparison to the $450 strike price or $4 strike price with significantly less open interest, the home run is really holding above $5, because then you have the cascading effect of both $4, $4.50, and then the big home run, $5, going and all having to expire in the money at the same time. If this holds above 5, all of a sudden these options are going to expire in the money and market makers are going to have to buy up more shares to remain neutral, which would be fine. But the problem is if you really do the math and you look at the free float available on the stock and the amount of shares available to be borrowed, it's easy to conclude that this buying pressure isn't going to be absorbed well into the stock price. It could bid up prices quite a lot. Now, at the same time, if you followed a lot of similar plays like this, you know that oftentimes when push comes to shove, there's ways that they can minimize their impact of delta hedging. We've seen a lot of magical selling pressure come out of nowhere right before the most imminent gamma squeezes. There's also some ways to hedge without actually buying shares, although that still causes some ripple effects in terms of bullishness in the actual underlying asset, which is the share price. But if you're talking sheer risk factors for a gamma squeeze and sheer reasons that people are getting hyped up, well, if this does hold above $5 into Thursday, you're going to have quite a fun show. Now, that being said, I don't want to sound like a negative Nancy, but if you do look at price history, it does seem like ATER tends to take a nice breather after its rallies, which could likely cause it to breathe down back below $5 before Thursday even gets here. The gamma squeeze theory is really banking on momentum continuing to hold this up and perhaps get it to higher and higher levels. The $5 to $6 range is kind of the magical point where you really start causing a lot of cascading buying pressure and momentum if it does hold above there into Thursday. But if it doesn't, that potential for a gamma squeeze then continues on to the next week if you get another breakout, and then you have the next wave of options expiring on April 22nd. But the second big thing to know is the setup in totality. The power of short sellers has been decreasing rapidly, while risk to short sellers has been going up rapidly. And the buying momentum has been increasing, at least as of right now. You're seeing another breakout attempt today, and ATER is once again taking the top few places in retail interest in many forms. Yet the situation for short sellers continues to get more and more desperate. Short interest is at 41% of free float now. Cost to borrow is as high as 328%, and there's barely anything left to borrow. 66% of the free float is already on loan. You compare that to something like Apple. Apple's percentage of free float on loan is like 0.18%. The point here is that ATER has had the book thrown at it, trying to get it down, and it's had its shares resold and resold and resold into oblivion. Yet it just doesn't seem to be working. Keep in mind too that this is just what we know about. This is a company whose CEO in the past has said that their preliminary data on illegal naked short selling showed 7 million naked shorts as of October 15th, in addition to 8.1 million shares officially sold short at that time. If that's true, that means that almost half of all shorted shares were naked shorted. Let me tell you, there's nothing pretty about a short seller with their junk hanging out. Real shorts are you shouldn't be able to go outside, common decency. If this was back in fall, who knows what the situation looks like right now. If you were valuing ATER on the fundamentals alone, sure, ATER may be considered a fair short, especially when it was trading at $40, $30, or $20. But if you have such aggressive tactics being placed on one side, and then you have another side going to counter it, it creates this ricochet effect. One of the reasons I already told you, but one of the reasons I've covered ATER so aggressively over the last couple of weeks is because, again, this time around you were seeing some of the very, very same setups with high utilization, predating runs that we saw during the last several of ATER's biggest rallies. Those two were set up exactly like this one is set up, but this one is a lot more aggressive and the stock price is trading a lot lower. Short sellers have strong conviction that this one is worth shorting a lot more at these prices than it was worth shorting at $20 or $30 or $40, which is ironic because it creates this dynamic where it's a lot easier to call their bluffs. Just a couple weeks ago, it was trading below book value. Assets minus liabilities. Keep in mind that they just reported a massive revenue increase year over year. So it's not like you have this trash garbage shell company here. You have a real company with real people in it with real products. But at the end of the day, you and I both know how this game goes. You get a period where there's massive momentum, you're speculating on how long that momentum is going to be here and how much pressure it's going to put on the other side, but then eventually it dies, and it dies rapidly. From a trading perspective, if you want the highest probability for more pressure squeezes on the options chain or from short sellers, you need this to hold and retain value somewhere around the $5, either this week or next week. So far, it's done everything that we wanted it to do. But if you want another bigger, sizable rally, another massive breakout, you want to see either a slew of new momentum come in, pushing it higher, or at least the retention of the $5 to $6 region. But at the end of the day, always manage your risk. Alligator's gonna alligate. That caps off today's video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle if you're looking to learn how to trade very violently with our step-by-step lessons, our private chat, our daily morning briefings, as well as our full price target list. I'll go ahead and put a link to ZipTrader U below. Make sure to use coupon code NEVERGIVEUP before it expires at the end of the month and prices go up. If you're looking to get up to 6 free stocks with Moomoo, I also have a link to Moomoo down below. They are an excellent trading app, and I think you're going to have a very good time with them. Have a good one, folks, and I'll see you in the next video.